Okay, hello friends. We are ready to start the commercial modules. And the very first module that we're going to start is the BOP versus the CPP, the business owner policy versus the commercial package policy. So what I'll do is I'll turn my video off so that we can fully concentrate on the PowerPoints. So I'm going to go ahead and turn my video off, and I'm going to share my screen here with you guys. And let's go ahead and get started on this commercial BOP and CPP supplemental material. Now, you're in the right place, and you've heard me say this before. If you're struggling with the property and casualty pre-licensing state exam, you really want this to work, but there's so much material out there and you're having a hard time figuring out what it is. So what I've done is I've used these videos to streamline what is important and learning the key points for each subject. Now, again, I'm Tammy Grosso-Delora. I've been in the insurance industry for 30 years. I've been teaching these insurance classes for 27 years, and I'm a subject matter expert for Pearson VUE. In addition, I've purchased several insurance agencies in addition to owning this insurance school. So I'm telling you that because I want you to know that I'm in the trenches with you guys. So any examples I give you is just really clear, real life examples so that you can use those to pass the test. I'd love for you to follow me on Facebook and LinkedIn under Tammy Delora Insurance Educators. I'm all about preparing you for this insurance exam, repeating the information over and over again, and having the confidence that you can pass this test. So inhale confidence, exhale doubt. You are not too old and it is not too late. So let's go ahead and get started. When we're talking about commercial, and I think about commercial as also being businesses. So there's two ways that you can put a commercial policy. So if someone comes into your office, and I like to use restaurants as an example because restaurants can be put on a BOP or CPP. So let's say Tom has a restaurant and he wants to put insurance on his business. And we're either going to put it in a business owner policy, and if it doesn't fit a BOP, then we will put it on a commercial package policy. But let's first talk about what a business owner policy is, because most of you guys will be writing a lot of business owner policies or BOPs. Now, the general nature is it does provide property and liability insurances to small and medium businesses. So it is a package policy, just like your homeowner policy, just like your mobile home policy. Now, just like your homeowner policy, you can choose some endorsements to make it your own. You can do this as well under optional coverages. So the policy is mainly intended for businesses that typically operate on their premises and they do not have a large products or completed operations exposure. In other words, they are not manufacturing a product. So again, it's a package policy. The rates are usually lower than the CPP. Actually, they're much lower than the CPP, but there has to be some tight eligibility requirements. So many insurers will depart from these requirements and make them less stringent, but you just need to know this for the state test. Now, office buildings usually do not exceed 6 stories in height or 100,000 square feet. If they do, then they will go on the CPP. Now, remember, you are insuring the business owner. So this business owner owns that apartment complex or owns that condominium association. It cannot exceed 6 stories in height or 60 dwelling units. Now, remember, in each one of these dwelling units, if it's an apartment, you're going to have tenants in there with HO4s. If it's a condo, you're going to have condo unit people in there with HO6s. But again, these are tight restrictions for your BOP. Now, usually you cannot go over 6 million in sales. Under these BOPs, they can insure contractors, carpenters, electricians, painters, and plumbers. Now, restaurants are usually limited to fast food types up to 7,500 square feet. They do have a limitation on alcohol sales, like beer and wine is 25% of gross sales. Convenience stores with gasoline pumps, but gas sales are limited to 50%, with no auto servicing, auto washing, restaurant, or propane kerosene filling is permitted. Now, no matter what, no matter if it is under 6 stories, no matter if it is under 60 units, these are some risks that just cannot go on a BOP, and they will either have to go on a CPP or a different policy. When it comes to auto repair or service stations, those will not go on a BOP. banks, savings, loan associations, household personal property, because this is a homeowner policy. No manufacturing, dwellings are going to go on dwelling policies, and any places of amusements like water parks or amusement parks like Carowinds or Six Flags. These are not going to be able to go on your BOP as well. Those are ineligible. Now, like I said, this is a package policy, just like you have in your homeowners. So your property is going to be a section 1. And there are 2 major coverages that your property will cover. Now, keep in mind, not everybody, not all of your business owners will have a building. They may not own a building. You may just be insuring business personal property. But if you do, there's a coverage A building. It's completed additions, fixtures, permanently installed machinery and equipment can go under your building. Personal property to service the premises like your tractors and your lawnmowers. Now, coverage B is business personal property, and a limit of insurance must be shown in the deck for each type of property. Tenants, of course, will not require building coverage. The property is very similar to that building and personal property coverage form. And also these BOPs have business income and extra expense. Now, if you haven't gone over those forms yet, we'll do that in a separate module for your commercial property. But what happens is your BOP has a lot of great coverages for a little bit of money. Now, keep in mind, when we talked about our homeowner dwelling forms, we had relationships. So it was 50% or 20% to come up with our limits. Here, you don't have those relationships. You just have a limit that you put there. Now, you'll either write a standard form, which basically is fire, lightning, wind, hail, aircraft, auto, riot, volcano, explosion, smoke, vandalism, sprinkler leakage. There is no theft basically in the standard form. It is a named peril form. Now, your special form will have theft in it. So remember, in your homeowner policies, theft is on all your forms. Your dwelling policies, theft has to be endorsed. And here, theft starts at special form. Okay, moving on here, you do have some optional coverages, which are endorsements that you can put on these BOPs. If you have a client that has signs, even if they're a tenant, they may have what is called care, custody, and control of their signs. Signs are usually on an open peril basis, which means they cover everything that's not excluded. Now, there are some exclusions like wear and tear and hidden defects and rust and corrosion and mechanical breakdown. But basically, think of your perils a fire, or it gets vandalized, or an auto runs into it. Those are the things that we're talking about. Now, the limit for signs is $1,000 automatically. If you need more than $1,000, then you can add on this coverage. Now, there's also a coverage called money and securities. Now, this is a type of crime policy, and we're going to talk about crime policies more in a different module. But on your commercial property form, even if you have a special form, you will not have any money coverage. Now, remember, under homeowners so far, we've got $200, and there's not another form out there that has money. Well, that's the way it is in the business form. Well, of course, companies need coverage for their money. So they will have to endorse this crime type coverage on there called money and securities. And it covers losses of money and securities resulting from theft, disappearance, or destruction. So that is pretty broad. You know, what happened to your money? Well, it disappeared. Of course, you have to maintain records so that the insurer can verify that you did lose this. Now, money can be at the insurer's premises. It can be at a bank. It could be at the home of the insured. Maybe the insured took it home, or the employee took it home, and we're going to make the deposit the next day. You usually have separate limits for inside and outside. So maybe you take in at the most $5,000, and you have, $200 extra for cash. So your limit may be $5,200 on the inside and $5,000 on the outside, or you could have the same limit. But basically, the reason why you need this is because your commercial properties do not have money coverage. Now, even if you have money in securities, what we just talked about, it does not cover employee theft. So if someone steals your money, and you have money and securities, you still won't have any coverage because you have to have employee dishonesty coverage. This is the only endorsement or the only coverage out there. And this is also considered a crime policy as well, or a crime coverage, if you will, as well. So again, even if you have money and securities, it's still not good enough because money and securities does not provide coverage for your employees. So this is for all of your business personal property, money and securities resulting from dishonest acts of employees. Of course, it doesn't cover dishonest acts by the insured or partners. You can't insure yourself to steal. There is a limit that's shown in the deck, and it automatically terminates on any employee once the insured or insurer learned of previous acts of dishonesty. And then the last one is mechanical breakdown. Again, even if you have a tenant, your tenant may be responsible for their heating and air conditioning systems. And these are called objects. And we're going to talk more about those when we get into that commercial property form with Buller Machinery. Now, there's another coverage here called that you could add on called hired auto and non-owned auto. And when we get to our commercial auto, we'll go into a little bit more deeper on this. But this is that situation where maybe your employees drive their own vehicles in the business. So maybe you send Tom to make a deposit in his own vehicle. Well, we know insurance follows the car. So let's say Tom has a really bad at-fault accident, and the claimant, the party that's injured, not only sues Tom, but also insures ABC Corporation, Tom's employer. Well, if Tom does not have, if Tom's employer does not have a business auto policy, then they're out of luck. So what this does is it's added to the BOP only if your insured does not have a commercial auto policy. So it's an extra layer of liability that goes over the employees that drive their own vehicles in the business, and that's called your non-owned liability. Now, there is a section 2 here, which is your liability coverage, and we're going to cover it on its own situation. So keep in mind, we will go into detail the building and personal property coverage form and the commercial general liability form. The majority of these coverages are similar in the BOP. Okay, so now I'm going to just stop my screen here and kind of give you a little bit of a summary on this BOP again. So what happens here is your BOP is a great policy, but it has those tight eligibility requirements. And remember, you do have a section 1, and your section 1 will be your building, and it will be your business personal property. Now, you may only write business personal property for your insured, and then you will write it under a standard form, which excludes theft. There is no theft, or you'll write it on a special form. And this is the only form for your BOP that will cover your theft. So what does that mean here? Even though you have theft coverage here, which is great, okay, there still is no money coverage. Okay, so there's still no money coverage, and there is no employee theft. Okay, so that is why you need money and securities. Now, even if you endorse money and securities, there still is no employee theft. Okay, so that is why you need employee dishonesty, because not only, since this excludes employee theft, not only will it cover any type of business personal property, but it also will cover your money theft as well. So even though you have this special form, keep in mind you have no money coverage. That's why you need money and securities, and you have no employee theft. Okay, so even if you have money and securities, it still excludes employee theft. So the only policy that covers any employee theft, whether it's business personal property or money, is this employee dishonesty form. Okay, friends, so I'm going to head back over here to the PowerPoint, and that is your CPP. So it does a lot of wonderful coverages. It's a package policy. but it's very, very strict eligibility requirements. So be sure to know those eligibility requirements. It can't go over 60 stories, 60 units, 25% alcohol, 50% gas sales. So really no banks, no manufacturing. Now, if we have a restaurant and they serve a lot of alcohol, of course, we can't put them on a BOP, so we'll put them on a CPP. So with a CPP, we're going to be building a policy one at a time. And you want to have 2 or more of these coverage parts because you'll get some deep discounts if you do. So with the CPP, it is easier to understand. The company can make package policies if 2 or more, if 1 or more of the coverage parts is purchased. And actually that should say 2 or more of the coverage parts are purchased. And then it will have, some discounts there. So the CPP can include almost any commercial coverage the insured might need because, again, you can't put it on the BOP. Now, you'll have to write your ocean marine if you have a yacht, your workers' compensation, and if the client has an airplane, you'll have to write those separately. But what does it include? It includes the commercial property coverage form, which is the building and personal property coverage form, business income, and extra expense. It includes the commercial general liability, which we'll talk about in a different video. It includes the commercial auto, commercial crime, commercial intermarine, and your boiler machinery policies, which we're planning to go over each one of those in different modules. Now, when we're talking about a CPP, it consists of these 3 things: a common policy declaration. Remember, this is your information page. Common policy conditions, and 2 or more coverage parts. It could be a boiler machinery and a building and personal property coverage form. It could be a general liability and a business auto. Now, what is your declaration? This is the who is an insured, when they're an insured, and for what lines. It includes a name, mailing address, policy period, description, coverage parts and their premiums, a list of forms applicable to all coverage forms. Now, what are your conditions? Your main condition here is your first named insured because they have higher responsibilities. Whoever is that first named insured will have the higher level of responsibilities, including premiums, cancellations, audits, inspections, and other duties. Now, the first name insured is the only one that can cancel the policy in writing. The premium refund is due to the first named insured. And if the insurance company cancels, then it must mail a written notice to the last known address of the first named insured. They don't have to do anything fancy like, make sure it's got a signature on it or anything like that. All they have to do is send it to the last known address. The first named insured is the one that makes any changes on the policy. They're the ones that pay the premium and that type of thing. Now, companies do have a right, and this is still under conditions, companies have the right to have these policies accurately rated. So they can audit the books at any time for up to 3 years to make sure that payrolls and sales are correct. They can also do inspections. They can go into premises and do inspections for their own reasons for insurability. It doesn't mean that they are safety inspections. In other words, they're not, doing ocean inspections and things like that. You can't transfer your policy without the written consent of the insurance company, except in the case of the death of a named insured. So if the named insured dies, his rights are transferred to the deceased legal representative. But you can't just, if you sell your restaurant, you can't say, oh, I've got this great policy. Do you want to, I'll just have you take my insurance policy. The company wants to underwrite them as well. So again, this is I'm going to come back to you for a second. This is your business owner policy and your commercial package policy. You're going to first see if it goes on the BOP. There's some really strict requirements there. Then if it cannot go on a BOP, like with a restaurant, if they have too many liquor sales or alcohol sales, then it will immediately go over to your CPP. And with that CPP, you're going to be building one policy at a time. And that's something I'm going to show you when we get into our different modules. So I'll see you in the next one.